Hello traders, welcome to today's episode. Uh, don't forget this is Evergreen FX channel, and in today's topic I are breaking down type of orders, how to understand the different type of orders in the market, how you can use them to your advantage, and how to use them in every situation. So let's move forward. I wouldn't want this video to be that long, so I won't be taking much time, but I believe that this will give you a clear understanding on how to use them, and it will help you manage your trades as well. Alright, so let's go into it. Here we have how to understand the different type of orders in the market. First of all, we have the entry orders. Here, these orders here means market execution. This entry type allows us to get into a trade in the exact moment of the current price of the asset chosen. They are the most used by traders, if you want to put it that way. It is also called instant execution, which means you place, when you see, maybe for instance you want to place a trade on Euro USD, for example, and maybe you know the current price, and maybe the current price was at 160 and you want to buy it. The current price at 1.60 or 1.50, depending on what you're looking out for, right? 1.50. all right, and then you instantly execute your trade right at the current price. Okay, price is at 1.50, and then you execute your trade right at this very price. Okay, right at this very price. You don't wait for the market to go and come back or anything. You are contented with the price at that given time. Okay, so you really want to get into the market right at that particular time. So right here you have this as your entry point. Okay, you have this as your entry point, and it's instant. You don't wait. You understand? So in this case now the market is at this price and you do that. Right, now let's go further into pending orders. This one is not a pending order, but when you come to pending orders, we talk about some few basic points here. Pending order, have limit orders. Now in limit orders, this entry type of order is excellent for those looking for a better price, though it takes a little more experience. Why I say a little more experience is because if you don't understand this type of entry or this type of order, you will make a mistake, and when price gets to your point, you might be triggered in the wrong direction. That is why it really needs to have a clear understanding of these orders before placing them. Alright, so Now, what type of entry is this? It helps you. This type of entry is an entry that you actually saw that price is going to come down to a certain point. And for example, you can see what I put here. For example, let's assume that you want to buy an asset and market price is at 1.80, and you are considering finding a better price, right? We will place, or let's say for instance here, or let's change this. Okay, for instance, now let me go back again. Let's assume that we want to buy an asset and the market price is at 1.80, which to us is too high, is on the high side, right? We want to consider the price. We want the price to reduce before we go into it, and that means we want to look at the market and in a technical aspect, and then you are finding or considering finding a better price. Then we will place a buy limit order below the price at 1.50. That is what we think it is going to be reasonable for us to buy, right? Or whatever price, whatever we want to do. You understand? It might be less than that, it might be more than that, whatever we want to do. Now, when price reaches this our buy limit order, the order will be executed, which means the order will be filled. Okay, which means it will be triggered into the market. And if our prediction is correct, the market will go in the opposite direction. In this buy limit order, you're placing this order below the price. Price is on the high side and you want price to come down. Look at price from this point. Now at this point you want price to come down, right? You want price to come down to your own entry point, which is here, right? You're looking at price coming down to this point before you get into the market. So this is where price came to, and you can see I have a red line here. This is a stop loss, right? You can place this limit order right here and place a stop loss below, which is sometimes most importantly required for you to place at least minimum of 10 pips below the entry point, right? So that you don't get triggered or taken out, stop haunted before market goes back in the direction you were anticipating. So in this case now, you will need to make sure that your stop loss is absolutely at the right place. You understand? At the right place. That's why I put a stop loss here, because it's very important. You don't place this type of order without a stop loss, because the market can equally come and trigger you and then refuse to go up as predicted, and then it comes downward, and then it takes you out with a minus, a little minus or something. This is why the stop loss is very important. Okay, and this type of order is called buy limit order. Do we understand? Now moving further to sell limit order, which is the opposite of it. Right, price is below and then price rises, and you're looking at, okay, you go one, there's a certain place you're looking at, the price will get to at 1.80, and then when price gets there, before price gets to that point, you have already placed your pending order waiting for price to come in at that zone and trigger you into the market, and you are and you are in the market right when price gets there, and the market or the price drops from that point. So here also we have stop loss here. The reason for the stop loss also is to limit your losses. In case the market comes triggered here and refuse to drop down, you will be safe by taking you out with a minus, or what you decide to risk for this type of trade. Alright, price at 1.80, right? Now you see the price drops to 1.50 and trigger our limit order and then rises. Now here, now you can see price at 1.50, and then when it gets to 1.80, it triggers our sell limit order and then drops. As simple as that. Okay, so now let's move further. Now we have buy stop order. This type of entry order allows us to assess in the direction we think price will go or move. Do we understand that? Now we're looking forward to understanding that market is in an uptrend. This order is meant for uptrend. It's not for downtrend. It's basically meant for uptrend. Now you realize that price is in an uptrend, or the direction of the market is up, and you're looking forward to buying at a certain price, knowing fully well that the market will go in your direction. Alright? And so you place your pending order above the price. Now when price gets to that point, it triggers you in and continue in the uptrend. This type of order does not drop. You are expecting a continuation in the upward move. You can see current price at 1.50, and then you think price will reach 1.80. So we place our buy stop order at 1.60, and when price gets there, our order is triggered and the price continues in that direction, does not come down. That is a buy stop order. Now the opposite of it is sell stop order. Now the market is basically in a downtrend. We're looking forward to continue with the trend in the direction it is going, which is downtrend. And now we discover that price is at 1.50 precisely. Let me put it here. Price is at 1.50 right here, and now this is a stop loss, right? And now we discover that price is going to continue in the downward direction, and then we make sure that we place our penny order below. This is below because it's sell stop. You want the price to continue in the direction of the trend, so you place this penny order below, which is at 1.40 or whatever you want to place the penny order at. Now we can see here price at 1.50, and we think the price will continue the downtrend. Then we place our sell stop order below the price at 1.40, and we get triggered in when price gets there, right? And this is just a simple thing to do, right? So it's just as simple as that. Now in summary, the whole thing is instant execution is not a pending limit or a pending order limit or an order limit. It is an instant execution. You don't have to wait for price. You see at the current price and you love it and you get into the market. But these are pending limit or pending orders or limit orders. Now in a simple term, this is buy limit. A price is here. Look at this, is price coming from here down. Your pending order is here, order placed, and then price triggers you and then pushes up. Look at price pushing up here. Now sell limit, price is coming from below, which is here. Now buy limit is price is in a downtrend, and you discover there is a support level around this 1.40 or 1.50 or whichever area the price is. This area is an area of value, and you place your limit order there, your buy limit order there, expecting price to come from the downtrend and trigger you in and stop going down and continue going upward. That is, price reverses from the support level to become an uptrend. Alright, that support level serves as a resistance. I mean, that support level now serves as a point where price could not break, right, and turns from that point going upward, right? And then you can see sell limit order here. Sell limit here implies that market is in an uptrend, is going upward, and you realize that there is a round number, or yes, a round number or a resistance area You discover the price, it has been respected many times, and you discover the price will come up to that point, and when it touches that limit, that area of value, price will drop, right? And this is price in an uptrend, and then triggers your order here, which is order placed, and then drops down massively, and then down to buy stop. You know that price is in an uptrend, and then this is the order place. You place in the direction of the uptrend, and market comes and trigger you in and continue in the line or in the direction of the trend. And then here the same thing, sell stop order, or this is the order place. You got this red line here, and the market is in a downtrend, and you what, market gets there and continue down. Look at price breaking or triggering you into the market and continue the down move. So here we have it. This is all about pending orders you need to know. All right, it's a very simple concept. Don't complicate issues, just make it very simple, take it very simple. And then many of you that do not understand what this concept is about, and most of you in the group, that whenever I send a setup and a limit order for you to place them, you get confused. This is the whole concept. Make sure you sit down and digest this and understand, so that anytime I send a setup in the group, you don't call me up asking questions or chatting me up, DMing me for any other outside questions. You just need to understand this is a full concept. Know the type of order you want to place. First of all, establish the trend and know exactly what you're looking out for before taking any trade in the direction, or setting such limit orders in the direction you want to set it. All right, so this is the short concept I want to break down to you. So if you found value in this, make sure you like, you subscribe, you comment. All right, and keep watching. All right, more contents like this will come up in no just time. All right, take care of yourself, guys. Peace.